what's your take just generally on AI right now?
Yeah, look, I think the question is still up in the air in terms of what are the use cases going to be and how did the use case manifest into actual business value. I think one thing that is undeniable is that the reason these companies are spending the amount of money on data center build out and GPUs and power grids, et cetera, is because they feel there's potential. And so the question then becomes, as an investor, where do you think the scale is of that potential, either to the upside or to the downside? And I think there's some things that have shown massive potential, like self-driving, which is trained on a lot of AI chips. I have a Tesla and it's completely changed my life having that car drive me around. And if that could replace the driving TAM for Ubers, taxis, et cetera, I mean, that just seems like a massive, massive opportunity that needs a lot of compute. And then there's other things like chatbots, which I personally feel has a lot of potential in my life. I can't live without them. But to some people, they might not be as exciting. So I think the growth prospects of the foundation model companies like a Claude and an OpenAI are going to make the argument for why AI is real or not. But we have a lot of things coming, like enterprise workflows, robotics, FSD, et cetera, which makes me think more often than not, this is real. Is it a little frothy in certain areas? Sure, but that doesn't mean it's fake. And I would struggle to short the entire market on that premise.
Shorting AI right now seems like a wild move at the moment. But yeah, I mean, I think there's so many use cases that are happening right now. Of course, some of them are kind of dreams or are going to exist years from now. But I don't know, personally and in my workflow, the amount of AI I use is just like, it's not enough. Every day I'm like, shit, there's more that I can be doing. There's more that I can be doing. And I think every business is going through this, which just kind of tells me.
I literally subscribed to a third LLM yesterday. I already have two.
Yeah.
I have to subscribe to a third one. Because it was better than the other two. Now I pay for three of them.
And so even if I know there's a lot of attention on the AI build out, like the infrastructure side, and a lot of those got crazy valued for a little bit here. But I think even if that might feel a little bit bubblishy and that doesn't scale to the point we thought, there's still the earnings that are improving from basically any company, even if they're not an AI company, as long as they're using AI, like, man, can you save profits? And so I see it being very difficult for the stock market in general to have a massive, long, drawn out bear market when you have every company in the world beginning to just starting really integrate AI, because the profitability and the earnings improvements that creates is just like, it's so big. And I feel like we're just getting to the start of it. Like, if you listen to the NVIDIA earnings call, was it like 2 weeks ago now? They sat there for like 30 minutes and just named off every company and how they're integrating AI and how it's making their business more successful. And so I'm just like, how the heck do you go in a bear market when you have that sort of technological change happening within companies? So there's that side of it. The other thing that I want to get your opinion on was recently, I think it was yesterday, Anthropic came out and said they're potentially going to IPO as soon as 2026. So we now have two of the biggest and sort of like, let's call it, most important AI companies in the world that are private, Anthropic and OpenAI, both saying, hey, we're raising hundreds of billions of dollars and we're probably going to IPO. Anthropic was around 300 billion or 350 billion, and then OpenAI is looking at like $1 trillion IPO. What are your thoughts here? Do you think this is a good idea, bad idea? Valuations make sense? Like, kind of what's your thoughts as you first heard this?
So I don't have enough understanding of how much revenue and gross profit and margins these companies have, because I know that's public, but the reported growth rates, Anthropic was doing $1 billion in revenue in January TTM. Now it's 8 billion, projected to be 26 next year. And we're talking about 800% growth going to 400% growth, which is a decrease, but 400% is still pretty damn good off of a big base. So I think that growth rate is something that the public markets have not seen since the internet companies. And so, yes, it makes sense to go public because there's going to be a lot of capital from a lot of retail investors in particular that have been dying to get access to these names. So I think it makes sense from that perspective. Now, when you become a public company, the public scrutiny and the 90 days per shareholder meeting, the quarterly calls, like, a lot of that stuff is tough to live up to. And so I do wonder that if they're going public just to get the money, are they going to be able to sustainably grow the share price while being public? Because the share price is a whole different story when one headline comes out and, Anthropic's private valuation is probably fine, but in the public markets, the stock will immediately react. The other reason I think the IPO makes sense is because you got to do it when it's hot. Like, at the end of the day, these companies need to take advantage of the liquidity. You cannot wait until 2030 if the sentiment around AI is hot in 2026. So I think it makes sense. I think they need the money. If they do go public and they take a lot of those public funds and put it into NVIDIA and AMD and Google TPUs, that keeps the broader Mag 7 trade alive. And so I think it would make sense, but ultimately we're going to have to see if that happens next year.
ETFs provide investors with a structured, disciplined, and diversified approach to crypto, which is cool, but the world is moving on chain. We need a crypto native equivalent. That's exactly what Reserve's decentralized token folios, DTFs, bring to the table. Reserve DTFs are rule-based baskets of crypto assets packaged into a single token, like CoinMarket's CMC20, crypto's version of the S&P 500. Go to milkroad.com/reserve to find out what's on offer.
Okay. Speaking of NVIDIA and the TPUs over on Google, we had some news this week from Amazon, which they're kind of getting into the mix as well. And I know that you've been quite bullish on Amazon for a little while here. I'd love to just get your, let's start kind of zoomed out take on what Amazon is doing with AI and how they fit in this whole like AI dominated sort of industry and world. Walk me through what you're kind of seeing in terms of what Amazon is doing, and then we'll talk about that as an investment afterwards.
Yeah, my Amazon thesis relies on two sort of macro things happening in the company, which I guess bleeds into the investment thesis, but this is also kind of what they're doing as a company, which is why I got excited for them back at around $212. This was late September. First of all, I just didn't look at Amazon stock all year because I was focused on other things, and I saw it in September, like it's up 2%. I was like, what? There's a bull market. What's going on? And so I started digging into the company, and I'm like, what's the narrative that's hurting them? And the number one thing was AWS is losing market share to GCP and Azure. So I did as much research as I could, and I made the conclusion that I don't think this is necessarily true, or if it is true, it's not true enough to the extent for the market to give them a 2% return when the S&P is up 16%. And so I bought the stock. And then on the call, Jassy's like, we are reaccelerating AWS for the first time since 2022, which was the big thing that Wall Street at least wanted to see. For Google, they needed to get the DOJ stuff off their back. For Amazon, they needed to reaccelerate AWS growth. Amazon quite literally was the king of cloud. 2006, AWS started this whole cloud computing revolution. And so it made sense that that was accelerating in the age of AI. So I think that is something that's really exciting to me about Amazon. The second thing is robotics. I think the simple story is I think robotics is going to replace 50% of their workforce over the coming decade. Amazon's operating margins are 12.4%. They were 7% 8 quarters ago. 7% to 12% is a big deal, but 12% operating margins for a tech company is laughable. So that needs to get to 20 to 25%. I think replacing a lot of humans with robots that don't need all the expenses that comes with humans, there's a philosophical and ethical question about that. But the business use case is operating margins go up, net income goes up. Market cap should reflect that with a higher PE multiple. Also, it's trading at its lowest EV to EBITDA multiple in history. So I think
interesting. So you think it's basically just undervalued, and the fear or FUD around Amazon just didn't kind of make sense. And yet, as Amazon always does, they continue to ship and they continue to make their company better and better and better. And your assumption is they're going to do that in the AI world, AI and robotics world, which is really their key unlock is robotics. But they also launched their own. I haven't read it yet, so maybe I'm sure you have because you just did like 3 hours of talking about AI on your YouTube live. Did they launch their own GPU to compete with NVIDIA and Google, or what happened here?
Yeah, so it's a custom chip, an ASIC, a Trainium chip, and it's not necessarily rivaling NVIDIA's general purpose GPU that is sold to millions of customers, but rather it's very specific AI workloads, particularly for AWS customers. Amazon, just like Google has with TPUs, maybe trying to get into that market. And it makes sense. They should be doing that, and they should be getting efficiencies over NVIDIA, and that will force NVIDIA to be even more competitive. But the market is like, and I think that's where we have to take a step back. If the market itself is as big as we all think it is, if AI truly is bigger than the internet, and you either agree with that or you don't, but if you agree with that, then the market's going to expand. Competition is going to increase. NVIDIA's not going to, this is not bearish NVIDIA to the point where NVIDIA is going to lose market share, but NVIDIA will lose some market share. But if the market's growing, those are still, meaningful markets for people to compete in.
Right. Absolutely. So what is Amazon today? It is a $2.5 trillion company. What is your expectation for a lot of these big, like the Mag 7 companies? You've got Google's gone up almost, it's added like 2 trillion in market cap this year, like since like April or something. It's pretty crazy. So it's like getting close to a $4 trillion market cap. NVIDIA is floating between 4 and 5, Amazon 2.5. Where do you think these things are going? And we'll talk about some of these more specific companies afterwards, but I'm just curious, like, I think a lot of people struggle to go, oh, I'm going to buy Amazon. It's 2.5 trillion, or NVIDIA, it's 4.5 or 5 trillion. Are they 10 trillion in a few years from now? Are they 20 trillion? Like, how high do you think these things are going? Or does something stop them?
Well, it's hard to be the person that says these companies are going to be 20 trillion because, you just sound crazy and people, it's hard for them to take you seriously. But I genuinely believe that the rich get richer. I think the trade for 2026, and I'm still trying to formulate my thoughts on like how 2026 will play out, but I think Meta, Amazon, and NVIDIA are my 3 Mag 7s going into next year. Meta and Amazon barely up this year. NVIDIA, I just think because of the AI bubble fears, this one continues to trade at a discount to where they need to put up the earnings to get a reasonable premium. So I think the rich get richer. Now, the question is there something that happens over the next decade that fundamentally stops Microsoft, Amazon, Meta, NVIDIA from getting as big as they are? And if that does happen, I think we have a problem with the entire economy because these stocks are the economy. And for everyone saying that they're not an economy, for everyone saying that they're not going to, or they're not a major contributing force to the economy, you're just wrong. Look at the balance sheets, look at the net income, look at the cash flows, look at the daily influence they have in our lives. Instagram, 3.8 billion users, Amazon, like these are the Google search. These are the defining companies of our lifetime. Maybe there's going to be a new 7 when we all die, but for now, it's these guys. So yes, I think they're the trade for the next 5 years.
Want to stay ahead of the biggest technological shift in history? Subscribe now to get insights straight from the sharpest minds in tech and finance. Quickly, you'll note this show's for educational purposes only. Nothing here is financial advice. Investing always carries risk. Never invest more than you can afford to lose. Thanks for tuning in. See you in the next one.